All right, let's get started. So today is September 30th. Today is also the quarter end and the month end for September. So very significant external context for today, but it's one of those days where the external context is quite finicky. Because it's the quarter end, because it's the month end, the market can really do whatever it wants to because as we know, we live in a capitalist society. So it's really just the big money versus everybody else. It's institution versus everybody else, right? So for today, it's really about how those institutions want to reposition. It's about how institutions want to lead into the new quarter, right? And for today specifically, I think all of the chop up until the final past 2 hours of the day or the final 2 hours of the day makes a lot of sense given the contextual analysis, given the specific structure that the market was trading around, because the significance of 66.95 through 67.0375 was talked about absolutely nonstop yesterday in my homework report and today in the pre-markets for the ES guide and the pre-markets live stream. So we're still continuing to collect premiums. We're still continuing to harvest premiums. Going into this week, we made it very clear that we're going to collect all the premiums above 6,500. Is the market going to break down into 6,500 this week, into next week? Those are the odds that we wanted to play for. And all of the premiums that we sold has a very likely chance of expiring worthless. So what happens when those contracts expire worthless when we're selling puts? It means that the broker has to pay us out the premium. It has to pay us out cash because it's worthless. Whoever paid for the premium, we are getting the full premium that they paid for. The contract has expired worthless. It expired well above where they sold the puts, right? Their strikes. So even if the market is to break down, 2, 3, 4% into these significant macro structures, we're going to buy that dip anyways, right? We're smart traders. Until the macro time frame context changes from extremely bullish to neutral or bearish, of course we want to buy those dips. And remember, the number one principle about trading the S&P 500 is that it's one of the most bullish, if not the most bullish instruments in the world. So when the macro time frame is bearish, that is 15 through 30% of the time in a 200-year data portfolio, right? Which is absolutely nuts. Even if you look at the past 5 years, you can understand what I'm saying. But anyways, let's go ahead and jump into the notes for today. Let's go ahead and discuss what happened. 66.95 through 67.0375 is the structure that keeps the chart neutral. As of now, sellers are attempting to break it down. Significant structure, and it will dictate who's trapped and who's in control on which time frame. We also have some news at 10 a.m. So this is the futures contracts, right? And this is pretty much everything that we need to know for today's session because unfortunately, we did not receive any volatility. Volatility literally just means price action breaking down, which increases volume and increases volatility, right? The fact that 66.95, the very first support on the chart that we talked about right here, 66.95, this marks last Monday's overnight low, which was one of the most significant breakdown triggers last week. Eventually, it got recovered and flipped back support. As of now, sellers are attempting to break it down once again, although buyers are holding on. The most aggressive support on the chart plus yesterday's low, plus the overnight low is housed here. Buyers defending is a major win for them. So let's understand 66.95 through 67.0375. And the only way to understand that is by zooming out. As a good trader, you zoom out. Doesn't matter if you're a day trader, swing trader, investor, you zoom out because the market could care less about a 5-minute range. It cares about larger macro structures. That's always what's going to dictate your 5-minute range anyways. So let's go to the 1 hour time frame and let's look at 66.95 through 67.0375. Connect the dots. That's what I like to say when people are trying to figure out how to draw structures. It doesn't matter what time frame you're on, just connect the dots, right? You can create structures. But as I said before, the macro structures mean more. 66.95, connect the dots. We have the FOMC high. Excuse me, not the FOMC high. This is last Friday's high right here. Continue to connect the dots. We have last Friday's high aligning with Wednesday's after hours high. And look at this Wednesday high, by the way. This is not a coincidence. This is a minus 80 points dip off of Wednesday's 11 p.m. high. And why did that happen? Because on Wednesday during RTH at 11 a.m., this is actually kind of insane from a timing perspective. From 11 a.m. to 11 p.m., right around here, you see that price action on Wednesday during RTH broke down this significant line in the sand. 67.0375. Keep connecting the dots. We also have the Tuesday low, the Tuesday RTH low, and then we have the Monday RTH low. Keep going back and it even connects even further. But I would say Monday, September 22nd from last week is really where the significance of this zone started. Why? Because the bottom of the Monday RTH low on the 22nd is what started a breakout trend, a breakout structure above the previous all-time high from Friday, September 19th, 67.3150. So the bottom of the start of this breakout attempt above all-time high is extremely significant. Why? Because if all-time high is to get faded, if buyers are unable to sustain price action above all-time high, continue to connect the dots, then buyers can potentially be trapped. And that creates the lower highs down the range. That creates an elevator trip down the range because that's how sellers trade the markets. And ultimately, it led to around 66.31 around the bottom of the FOMC range from the 17th to be contested. So you can see now the significance of 66.95 through 67.0375. So many buyers got trapped here via the all-time high breakout structure being faded. All of these buyers getting trapped here got confirmed via the breakdown on Wednesday, and then they got even more crushed right here with the lower high at Wednesday, 11 p.m., right? So now when you continue to go back in the future, right, go to the present now, you see that buyers have now recovered the 67.03 level and the 66.95 level. The recovery on Sunday, the 28th, has now made this structure support once again. The fact that we're continuing to hold 66.95 and 67.03 showcases today that buyers are definitely doing everything in their power to hold the structure. They do not want to be trapped again, like how they were trapped back on Wednesday last week. And because they're holding the structure, now we're contesting better resistances. Remember 67.3150? We're heading back up there once again, which is not coincidentally the prior day's high. So from an execution perspective now, I feel like that technical analysis is fairly simple, right? And the more time you spend staring at this chart like I have for the past 4 years, every single day, nonstop, when you understand this contextual analysis, you can then apply execution and entry models based on your personality. Do you like to day trade? Do you like to swing trade? You also have to understand your portfolio goals. You have to understand your portfolio sizing, and you have to understand your personal life situation, right? All of those things, in my opinion, are more significant to understanding how to trade than all of the technical analysis I just did, right? But anyways, let's talk about the potential trade ideas for today. So if we go to the trade plan that I formulated in the pre-markets, we wanted 66.95 to break down. We wanted volatility. We wanted people to be chasing short in an overall bullish environment. Unfortunately, buyers were just too strong today. And the reason for buyers being too strong today is because Nvidia is performing a breakout attempt above all-time high. So Nvidia, if you guys have probably seen that meme before, Nvidia is literally holding the world on its shoulders. The entire watch list is essentially red, but Nvidia is pumping. Nvidia is printing an all-time high breakout structure. So therefore, ES is following suit. The NASDAQ is not red as well. The NASDAQ is green and ES is green. ES, no volatility, no selling action. and no breakdown of 66.95. So when I go back to this trade plan here, I had 66.57.25 long. Obviously, the prior Friday's low down here is very far away and it did not get tested. So what is there to do today if you're following along with that trade plan? Absolutely nothing. And is that perfectly fine? Yes, it is. Because you look on social media today and I bet there's a lot of people trading in this range. How many people can make money in this range? Not a lot of people. And the people that are making money in this range are showing you the one winner that they had in the 6 losers that they had to take in this chop, right? No professional trader is over trading this chop. If you take one trade in this chop, that's perfectly fine. If you're taking 5, 6, 7, 8, 9, 10 trades in this chop, there's a problem, right? That is pure gambling. We have to wait for an edge. And in this chop, in my opinion, after the first test was already printed around 10 a.m., there is no more edge anymore. We have to then wait for the fresh structures below or even the fresh structures above. So hopefully that makes sense, right? A lot of people on social media are going to be pumping, look how easy it is to scalp between 66.95 and 67.03. Scalp, 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 scalp. Well, I wish you good luck if you're attempting to execute that system, because you're probably just going to get poked out left, right, and center. But that being said, if you took one trade at 66.95, you know it was significant support until proven otherwise. Maybe you took that trade from 66.95 into the overnight high right around 67.16 and you held on to a runner for this move that we're getting right now. That's how I would execute a trade at 66.95, right? Other than that, guys, there's pretty much nothing. Obviously, the macro structure has been stuck within a very defined range. That's why the structures for this week so far have been fairly easy to read. The line in the sand, 67.31, connect the dots, right? We have the Wednesday high, we have the previous all-time high, the all-time high false breakout structure. It got tested on Monday. It created the Monday RTH high yesterday. And now it looks like we're heading back into 67.3150 off of literally just NVIDIA's strength alone, which is absolutely insane. What an insane ticker, right? If NVIDIA was red today, I guarantee you we would not 100% guarantee, but there's a good chance that if NVIDIA was red today, we would definitely be breaking down into better supports. Last Thursday's low, then we have the Friday low, last week's low, things like that. But anyways, that's why we don't tell the market what it wants to do. The market will do whatever the hell it wants to do. And we simply need to follow along and follow it like water in a river. That's why price action is king. That's why the structures on the chart are king, because it will always dictate who's trapped and who's in control. The market is very simple. If you're trapped, you're losing money. If you're in control, you're making money. That's it. That's why we focus on the market structures, because the market structures will always dictate that market's premise. For every single trade that we take, who's trapped and who's in control, whoever's trapped, I'm taking their cash, right? So heading into tomorrow, let's talk about some potential ideas. Firstly, we will have to wait for the closing print. Let's wait for the closing print. Let's see where the market closes, but I do feel like so far sellers have fumbled. 66.95 breaking down would have been a perfect gateway to contest better supports below, right? So the fact that we're still holding, if you just draw a simple retracement, we're still holding 0.382 of the bull leg that we started on Thursday, that showcases that bulls are definitely in the driver's seats. The chart in itself is still neutral until we get some more breakouts above resistances, until we get some more confirmation that sellers have been blown out the water. But holding the 0.382, holding the 66.95 level, this is pretty much everything that you want to see from a buyer. And then you just need some confirmation, right? You just need a follow through above the prior day's high. Then you finally need a follow through above all-time high, which will definitely just make you extremely happy if you're a buyer this week. Or if you're a buyer last week and you ended up holding your runners, let's say from Friday's low or the prior week's low. I know a lot of you guys, a lot of the members in the Discord, you guys bought the false breakdown down here on Thursday. Absolutely phenomenal stuff. And I know for a fact you guys held a runner as well, because that's what we want to do on every single trade, right? We want to have exponential return. We don't want to have FOMO. Therefore, we leave on a little runner as soon as we hit our targets. That runner is going to take care of all the FOMO that you may have, right? Because price action doesn't look like it's dipping that much this week so far. But that being said, let's see what happens. Today is still the quarter end, right? The day is not over. We still have 45 minutes to go. Where do we close? It's going to be very important. And so far, sellers have definitely fumbled. So far, we will see if 66.95 does break down anytime this week. Other than that, guys, thank you so much for tuning in. I'm going to pass on the reading club today because we are very close to finishing the book. So I do have to head out soon as well. So we are going to save the ending of the book, that is Best Loser Wins, for tomorrow or maybe the end of the week. I'm also working on a massive project with Rich. It is our trading edge. It's a full combination of every single thing that we do in Trading Wars, and it's a full tracker spreadsheet guide in Substack, completely free daily newsletter for every single person in the world, completely free. It's going to be sent out in the pre-market 1 hour before regular trading hours opens. So you guys can see the ES guide, right? All of these notes will be completely free. All of these notes and how I formulate a trade plan will be completely free. All of the positions that Rich is in with his put selling will be free, but in the Discord, that's where execution is going to take place. In the Discord, that's where you can ask real-time questions while the market is open, while price action is at specific levels, the significance of specific levels based on its contextual significance, things like that. But anyways, thank you so much for listening, guys. Let's continue to be better. Remember, trading is just about unlocking the best version of yourself. Every day when you wake up, you have to tell yourself, how can I be the best version of myself? Do you guys really think the best version of yourself is revenge trading? Do you think the best version of yourself is over trading? Do you think the best version of yourself is doubting yourself? Do you think that the best version of yourself is giving up? Right? Absolutely not. That's why those words are what we live by in Trading Wars. I haven't been here in a while. I see you changed the way you trade. How do you learn about the macro? Any videos that you watched? So for me, the macro, I've been trading for a long time now. 2021, 2022. But I really learned the macro perspective simply by drawing my fib and looking for the significant dips, right? It's all about, your -1%, -2%. That's your foundation. But the market structure is a good question. The market structure really comes down to understanding who got trapped at a specific level and how significantly they got trapped. So let's use the FOMC low as an example. Look at this FOMC candlestick, right? This 4-hour candlestick. This FOMC low was reacting to a prior breakout structure on September 11th, right? This was an all-time high breakout structure right here on September 11th. So the fact that we're defending this breakout structure, we're also defending 0.382 of the range. That showcases that a lot of sellers that were anticipating the market correcting or crashing, whatever that they were anticipating, got trapped, right? So you're just looking for where people are probably going to get trapped again. And if they don't get trapped there, then how does it change the significance of the market's outlook, right? Who's now in control? Who's now trapped? I know that if the prior week's low breaks down, I know that if the FOMC low breaks down, then the overall September range, which is this Fibonacci, is in jeopardy, right? We then have to hold the 618. We have to hold the 786. But we know that if the trend is going to be healthy, then price action shouldn't even retrace that deeply. That's why the FOMC low held 0.382. That's why last week's low held 0.382. The September trend is very, very healthy, right? So always keep that in the back of your mind when you're analyzing the macro time frame structures. And let's look at a different example here. Let's go to right here. This is the last time that I had a swing trade on September 2nd. So it's the exact same idea, right? But instead of drawing the September range, we're drawing the August range here. This is August 1st, and we're drawing to August 28th. And notice here, let me just get rid of, actually, let's go to a fresh chart for you. Let's draw that same fib on the 4-hour time frame. So notice again that the 0.382 and the 50%, they are retracements to signal that the trend is healthy and likely to continue based on if we're holding it or if we're not. The 50% retracement, 64, 39, 25, is in alignment with all of the structure. So again, just connect the dots, right? Connect the dots, connect the dots from August 12th, and then the Jackson Hole event was right here in this week, August 20th, 21st, and 22nd, right? So even the external context comes into play, right? The FOMC events, the Jackson Hole events, these are all significant external contexts that the market loves to trap traders with, right? Economic reports. So when you see that price action is retracing 2% on the S&P 500, you know that a 2% pullback is a fantastic opportunity. And fantastic opportunities are what institutions are always looking for, right? Because they have a lot of money. They have to hunt only A plus fantastic opportunities. If you're putting in $100 million into the market, where are you putting in your $100 million? Are you going to put it in at a minus 0.5% dip, or are you going to put it in at a 2% dip, right? Logic goes a long way in the financial markets. But anyways, once we pull back minus 2% into the 50% retracements of the August range, we're also aligning with all of this demand from the Jackson Hole events. We're aligning with all of this breakout structure from August 11th into August 6th. It even goes back all the way to July 31st, back here, July 30th. Buyers must defend this structure, or what's going to happen? The trend is going to come collapsing down. The trend is in jeopardy, right? So if you're a smart buyer, if you're an institution and you want to defend your existing positions, if you want to defend all of the demand from the Jackson Hole events, then it makes sense to get a position in at the 50% retracements and minus 2% on the S&P 500. But for us specifically as traders, right, it doesn't matter if it wins or loses. We have to be willing to take this bet. At the end of the day, as traders, everything that you put into the market is of risk. Right? That's why a trade is always a risk. But we have an edge, we have an advantage over the other market participants. So we don't mind putting in some money here. Regardless if it wins or loses, we don't mind. And to even control your psychology more, right, based on everything that we just talked about, minus 2%, 50% retracement, August range, all of this structure from the past, we do write-ups. We do homework in the pre-market. We do write-ups after hours to make sure that we don't hesitate when price action gets here to take a fill, right? So on September 2nd, we had a lot of entry models to take advantage of. This is how price action looked on a smaller time frame on September 2nd. Predetermined entry model, buy the level straight up, stop loss is fixed. False breakdown entry model, market into the level when you see the false breakdown criteria be met. And then finally, we have the Fibonacci trap. So I hope that helps. If you have another question, you can let me know. I hope that helps. Other than that, it does look like buyers are looking to take advantage of the trapped sellers today. 66.95 along with the NVIDIA strength definitely put the markets in question, right? We didn't know if 66.95 was going to break down. We didn't know if it was going to hold, and it looks like the market just wants to hold it. Thank you so much for listening, guys. I'm so grateful for everybody. It's just been an insane past few years studying this chart every day, but obviously the future is always about being better, right? Always, 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 always be better. If you watch these videos, the number one takeaway that I want you guys to have is simply just try to chase the best version of yourself. Don't chase price action. Chase the best version of yourself. Understand what that means for you, because everybody's different, and understand what that means for your family, right? Because financial freedom doesn't mean anything if we're not doing it for others, right? It doesn't mean anything for just doing it for ourselves. That's very selfish. Thank you so much for tuning in. I'll see you next time. Enjoy the rest of your day, and let's see where the market closes. That's going to be important.